How does inflation affect cryptocurrencies? I am quite certain that you have seen the terms cryptocurrency and inflation being used simultaneously all over the news and social media. From the start, crypto and inflation were presumed to have a close relationship with each other. If inflation was to go up, then crypto was also destined to soar. But during the recent years, even though inflation has increased at a very fast pace, crypto has been proven to be more volatile. This has sparked many debates everywhere about the exact relation between inflation and crypto. If the relation between the terms crypto and inflation still remain a mystery for you, then you've clicked on the right video. I assure you that by the end of this video, you'll know exactly how cryptocurrency and inflation are related to each other and what the future holds for this correlation. But before we begin, welcome to Invest in Knowledge. Knowledge is power, so make sure to subscribe to this channel for up-to-date essential knowledge to become more successful in life and in business. After the pandemic, when the price inflation started to surge, everyone was expecting cryptocurrencies to act as a hedge against it. But much to everyone's surprise, cryptocurrencies plunged. This weakened all the arguments that crypto would protect its value during times of rising inflation. People started to argue about the true relation between crypto and inflation. They also started questioning, is crypto not related to inflation anymore? And most importantly, what role will crypto play in the future with the constantly rising inflation? But before we get into that, I want to give you a little background on inflation. What is inflation and what causes it? This will help you in understanding its relation with cryptocurrency later on in the video a bit better. So you might have heard from your grandparents or other older family members about how they could buy more items from 50 cents than we do now for $50. That's because inflation causes a decrease in the spending power of any given currency over time. I'm sure that went over your head, so let me try to explain this to you with the help of an example. Alex and his friends, Anna and Yaya, live in a country with a vibrant economy, and they can easily buy all their favorite items. Recently, they fell in love with collecting action figures, and they love to shop for them all the time. The toy store in their town has all sorts of valuable figurines, and Alex and his friends often buy figurines from it. Even though the store owner is more than happy to sell his goods and earn profit, there is one problem. Due to Alex and his friends' shopping sprees, the toy store is running out of all the collectibles at a very fast rate. Due to the high demand, the stock is emptying out at a much quicker rate than it is restocking. And if this keeps going on, the toy store will run out of all the figurines soon. So what should the owner do to prevent this? Yep, raise the prices. And that is called inflation. Inflation reduces the odds of people spending their money. And in this way, the owner can earn more profit without losing the stock quickly. In today's world, a rapid increase in inflation and reduction in the value of money has forced people into starting thinking of ways to tackle this situation. If inflation would erode the value of a dollar over time, then it was about time people started looking for more stable assets against inflation. This is why many people began looking into cryptocurrency, because they believed cryptocurrency had the potential to become a digital substitute for dollars. For many decades, it was common for investors all over the world to invest money in gold and commodities to store and save their wealth. But with the fast-changing world, it's expected that not only will cryptocurrency be a leading investment class asset in the future, but it may also be accepted as a method of payment for our daily transactions. The COVID-19 pandemic has negatively affected the economic situation globally. During these turbulent times, people started to invest in cryptocurrency because it is decentralized and not controlled by banks or governments. The banks can lower interest rates or print more money to stabilize the economic situation of a country. When they start printing more money, the supply of currency in the market increases and its purchasing power becomes less. Thus, when you go shopping, you actually end up buying less things with the same amount of money. This is where cryptocurrencies come into the picture. Bitcoin is decentralized, which means that people, banks, and governments cannot control its supply. Thus, it's considered to be a reliable investment. It's also thought of as a lucrative asset because in the past decade, people have earned millions of dollars by investing a small sum of money. So it has had a transformative and game-changing effect in the lives of many people. But wait, and make sure you watch this video until the end before planning to invest in crypto. There is another side to cryptocurrencies which makes them less attractive for potential investors, and we want you to be familiar with the bigger picture. Over the past few years, it has been observed that the stock market, global economic situation, and the fluctuation among cryptocurrencies affects the price of Bitcoin. So over the past few months, there have been big swings in the crypto market. The prices of Bitcoin and other currencies have been anything other than stable. With the continuous rise and fall in the prices of cryptocurrencies, the status of cryptocurrency as inflation hedge is in danger. It will also be much more difficult to consider crypto as a reliable everyday currency if its prices keep increasing and decreasing frequently. This will diminish crypto's status not only as an investment asset, but also as a currency. So what should one do in this situation? I would suggest that for an average investor like you and me, it's better not to depend on crypto financially right now. The future of cryptocurrency is still very vague for anyone to make a big decision regarding it. Right now, the crypto market has been encountering some problems, and many protocol hacks have also appeared. Many big investors have also stopped betting their money on Bitcoin because of its volatility. It's a good idea to keep an eye on the market movements and make your decisions accordingly. That's all for today's video. Thanks for watching. I hope all the shared information will be helpful for you all, and if you have any questions or doubts, please leave it in the comments section. Don't forget to like and turn the notification bell on for more informative content.